Hi guys. Today we will analyze BorgWarner stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock is a bad performer in the overall market. The short-term trend is neutral, while the long-term trend is still negative. We need to see a little more continued positive action to make this really interesting. Support levels are around $38.80 and $34.90. Next strong support levels are around $31 and $25. Resistance level is around $45. Next resistance level is around $49. In the last month the stock has been trading between $34.90 and $40.80 range. It is currently trading near the high of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 2.3 million. This is a good sign as it is always nice to have a liquid stock. The stock has been in a downward trend since June 2021. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 12% per year, for last 5 years. We see that the average profit margin of the stock has been around 6% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 107% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for BorgWarner Company: bad, average, and good. First scenario. BorgWarner will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 6%. Future profit margin would be low, 4%. Future free cash flow to net income rate would be low, 70%. In this case, the fair value of the stock today would be $41. Second scenario. BorgWarner will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 8%. Future profit margin would be average, 4.5%. Future free cash flow to net income rate would be average, 85%. In this case, the fair value of the stock today would be $58. Third scenario. BorgWarner will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 10%. Future profit margin would be high, 5%. Future free cash flow to net income rate would be high, 100%. In this case, the fair value of the stock today would be $80. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 2.24. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For BorgWarner, analysts forecast growth rate around 8% per year in next 5 years, and future P/E around 10. Again, I will use 3 different scenarios for BorgWarner Company: bad, average, and good. First scenario. BorgWarner will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 6%. Future P/E would be low, 14. In this case, the fair value of the stock today would be $22. Second scenario. BorgWarner will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 8%. Future PE would be average, 17. In this case, the fair value of the stock today would be $32. Third scenario. BorgWarner will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 10%. Future PE would be high, 20. In this case, the fair value of the stock today would be $45. As you can see, today the stock is fairly valued, $39, if we expect the company's high performance in future. Both the profitability and the financial health of BorgWarner are neutral. Nothing too spectacular is happening here. The stock looks fairly valued at the moment, and the company is expected to show a medium growth in the next 5 years. The stock may be a good buy at these levels. Do your due diligence on this company before buying the stock. Keep in mind that the stock has been in a downward trend since June 2021. Be careful. It may be a good idea to wait for signs of reversal. Company's strengths. BorgWarner is a leading supplier of highly engineered components and systems, primarily for automotive drivetrain applications. The company has 96 manufacturing, assembly, and technical locations worldwide. Volkswagen, Ford, and Hyundai are BorgWarner's 3 largest customers, and make up about 1/4 of revenue. The company benefits from its ability to continuously innovate, a global manufacturing footprint, highly integrated long-term customer ties, high customer switching costs, and moderate pricing power from new technologies. The company will also benefit from EV growth over the next few years from the sale of inverters and other products. Turbochargers, one of BorgWarner's products for which it commands an industry-leading market share and accounted for 19% of 2021 revenue, are a cost-effective way for original equipment manufacturers to improve engine efficiency. Fuel injection technology from the Delphi acquisition also improves efficiency. The popularity of sport utility and crossover vehicles around the globe supports growth in BorgWarner's torque transfer technologies. BorgWarner is financially healthy and should not expect problems in meeting its short-term obligations. BorgWarner has a return on assets of 3.2%. This is comparable to the industry average of 3.5%. Its profit margin of 3.5% is comparable to the industry average of 3.6%. The company is expected to show a medium growth in revenue. In the coming 5 years, the revenue will grow by 8 to 10% yearly. In the coming 5 years, the earnings per share will grow by 15% yearly. Risks. Chip shortages, supply chain disruptions, rising labor and raw materials costs, and expected interest rate increases are major concerns. Other risks include weakening global vehicle demand, and a strengthening US dollar. BorgWarner is exposed to the cyclical and very competitive vehicle components market. A loss of focus in cost reduction or technological development could result in an erosion of profitability and return on invested capital. The company also has product governance risk exposure from potential vehicle recalls. The company has a return on equity of 8%. This is below the industry average of 13%. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.